Anne is standing by in Winnipeg. Go ahead, Anne.
Hi, I would like David's opinion on Prax Air. Do you hold it, or would you buy it, or is it too late in the cycle to buy now?
Right.
Thanks.
So, and fitting into our theme of reflation and stronger economy is industrial materials. And within industrial materials, we have some of these companies in the chemical space. We happen to own Eastman Chemical. I think Praxair is a great company. Praxair is in industrial gases. They sell internationally, but a large portion of their sales are in the U.S. And it's a beneficiary of a strengthening economy. So a lot of these industrial materials companies should participate, especially through the course of this year. Remember that they are cyclical. Now, when we get a correction at some point later this year, and I'll think at some point later on we'll get a bigger correction, I don't think it's going to be because we're headed into recession. I think it will be driven by, maybe overexuberance and strong sentiment, and that we probably have another couple of years in front of us before we're going to see economic slowdown. So these companies could benefit for a while. So, there could be some bumps later in the year, but I do think it will come from higher prices, and I'd be interested in having a position in industrial materials in your portfolio to take advantage of the improving global economy.
Kathy is calling from Belleville, Ontario. Go ahead, Kathy.
Yes, thank you for taking my call.
Pleasure.
I have a self-directed RSP. In it, I have TV. I purchased it 3 years ago for about $48, so it's done well in appreciation and in a dividend. And I also hold TransCanada Pipeline. 3 years ago, it was $65. It pays a good dividend, but it's really been doing nothing. So would it be wise for me to get rid of it? And could you recommend me a good stock that at least has a better chance of appreciating in value and also pays half a decent dividend?
Right.
Thank you.
Okay. So there's a theme here because we're getting quite a number of calls on bond-like companies, and we have to reiterate the same message. You're going to get your yield. Price has pulled back a lot. Like TRAP's pulled back from 65 to 56. Pretty big move down. And that's probably more or less done in the very short run. But I think it's going to underperform the market, right, for some time. So I would consider moving on if you're interested in total return, some stock share price growth plus dividend. And again, one of our three picks, I promise I'll point to one today that I think would be in a sector and a theme that is maybe a little bit better. Sadly, we have a really poor, political climate in Canada right now for this industry, and it's having an impact, as well as the fact that rates are going higher.
Art is standing by in Winnipeg. Go ahead, Art.
I would like your opinion on Algonquin Power. I got into it at $11 and some cents. It was over $14 not too long ago. It's pulling back quite a bit now. Is it time to get out?
Yeah,
no problem.
Same sort of answer here. The sector is under some pressure. Again, it's had a short-term hit. It's moved down from sort of $14.40 to $13.30. This one does have pretty good dividend growth, which makes it more attractive than many in the sector. And you get paid your 4% yield. But again, it's not going to lead the market. It's going to be something that you own for yield. And if you're looking for total return, growth in capital plus some dividend growth, I might look elsewhere. And again, we'll talk about a couple in top picks tonight.
Okay, no problem. Let's move on. Vivian in Toronto has a question about a sector that's pretty hot right now. Go ahead, Vivian.
Mr. Burrows, it's such an honor to be able to ask and get your opinion. I'm a long-term investor, and a sector that I haven't been in at all is, Canadian lumber. And I'm wondering what you think about possibly going into that sector. I'm worried about NAFTA a little bit, and if you think it's a good idea, what would be your pick within the sector? Thank you so much, and I'll listen to your answer.
Right. So, clearly NAFTA is something that we think about, and we think about, trade issues with respect to the sector. I think that those are risks. On the other side, you've got 9 million millennials in the U.S. starting to move out of their parents' basements. The home building industry is performing really well, and when there's strong demand, they'll pay the higher price for the Canadian lumber, whether there's a tariff or not. So, I wouldn't shy away from the sector. But I'll tell you, one way you might consider investing is through an ETF, CUT.
CUT.
Okay, now it's a US ETF, but it's going to get you really a basket of the US lumber companies, and it's a great way not to make too big a bet, just specifically on lumber, because there's some packaging materials in there as well. I own it in our macro portfolio to take advantage of this exact theme, and I think that it's a good way to play it.
Yeah, it's interesting. Canada apparently is only 5% of the
portfolio. You're not buying Canada. You're buying global timber.
Yeah.
And it's a company that benefits from an improving economy. But certainly the reason you want to buy Canadian lumber is because you think the U.S. housing market is growing. This maybe mitigates some of your risk on the NAFTA side of things.
Yeah, it's paper packaging and paper products are the big dominant.
And there's a lot of timber in there as well.
Right. Okay. Vivian, thanks for that question. We're going to be back with David Burrows, President and Chief Investment Strategist at Barometer Capital Management. The topic, North American large caps, the number 1-855-326-6266.